June 29th, 2026, and the market just delivered a genuine structural shift. The prior bearish thesis, bearish conditional on QQQ failing to close above the 721 to 726 resistance zone, was invalidated today. QQQ closed at 724, decisively through that band after failing it multiple times this week. SPY closed at 740, up 1.64%. Tech led the broad market, the risk-on configuration you want to see. So what drove it? The catalyst is in the headlines. Mediators set up de-escalation channels ahead of U.S.-Iran talks, and Reuters reported U.S.-Iran attack fears easing. That single geopolitical shift ran through global markets. Europe's ETF was up about 1%, Asia broadly constructive, gold fell about 1.25% as safe haven demand unwound and high-yield credit ticked higher. The cross-asset signals lined up cleanly around one catalyst. Chip stocks specifically rebounded today. That's the direct line to the Q's 2.5% gain in tech leading the tape. On the structure, QQQ is now above all three moving averages: 20-day, 50-day, 200-day. SPY is above its 50 and 200, but closed just below its 20-day, currently around 741.50. It traded under that line all session and couldn't close above it. The 20-day moves a little each day as new closes come in, so don't anchor on the exact figure. The point is simple. SPY still has to reclaim it. That's the key level I'm watching. VIX closed at 17.56, down 4.6%. Below its 20-day, 50-day, and 200-day, the volatility regime is normal and constructive. But VIX touched 1945 early in the session before reversing. The market tested fear and rejected it. $101.09, up fractionally in trend, RSI still elevated at 65. The one level to watch is 101.80, dollar resistance. If it breaks through and RSI reaccelerates, that becomes a headwind for tech. Sector rotation was textbook risk on. Tech and consumer discretionary led, defensives, staples, utilities, energy, lagged. Consumer discretionary flipping to a leader after weeks of lagging is a notable development. Levels that matter most right now: SPY resistance at the 20-day and then 747.60 above that. Support at 729.65, the level that held across recent sessions. QQQ resistance at 743 to 747. Support at 721, the zone it just reclaimed. Base case, constructive, but this is where discipline matters. Volume was below average today. A move on light participation typically invites a retest. One quantitative signal in the data leans toward a pullback on SPY towards 731. The structural read on QQQ is more bullish, with a signal leaning towards 737. There's a real tension between those two reads. I weight the SPY caution given the 20-day overhang and light volume. The next catalyst is the jobs report. Prediction market data in today's packet shows traders putting the odds of over 100,000 jobs added at below 60% against a Wall Street consensus above 118,000. A miss would put today's relief rally on trial. Confirmation comes from SPY reclaiming its 20-day on volume, QQQ holding above 721, and VIX staying below 1750. Until then, constructive but conditional. That is today's market brief. This is market analysis for educational purposes only, not financial advice. If this breakdown helped, hit the like button, subscribe for the daily market brief, and check back tomorrow after the market close for the next update.